stop. And if you haven't started yet, we'll see you next semester. Maybe. Might already be true. Okay, so there's no time left, is there, guys? And you got, I guess you have tomorrow, huh? You're ready for that quiz? If you haven't started, that's why. Okay, anyway, I want to do, well, let's do a real quick review. Synonym for debit. DR. Left. Okay, yeah. DR stands for left. Yeah. Okay. Debit. Synonym for credit. Yeah. Oh, I want to do that. Synonym for credit. Synonym. Right. Yeah. Left and right. Left and right. Everybody knows that. You only have to have one of those memorized, right? Okay. Either one. Take your pick. Okay. So we know that. There are 5 kinds of accounts. All your stuff is called assets. Everything you owe against that stuff is called. The difference between what you have and what you owe must be what you own, which is called your equity. Nothing to this, right? Okay? And then that's a balance sheet, right, everybody? By the way, if you look at the practice quiz, how many of you have the practice quiz sitting in front of you? Oh my gosh. How many of you have electronic capability to pull it up? Such as the rest. I think I would do that. And I don't think I would ever come on a day before a quiz and not have the quiz with you. What if we work some stuff from it? What if you'd like to work some stuff from it? How many of you have worked the quiz by now? Okay. Oh my. You guys are in trouble. You're in trouble. Haven't even given it a shot yet? Really? You haven't even looked at it? How many have not looked? No. How many have at least looked at it? That's not even. Holy cow. You're in trouble. Geez, if I hired somebody and it was, how many days have we been together? Last Friday, this is Wednesday, and you had done absolutely nothing in that many days? It's over. It's been nice knowing you. Enjoy your life. Bye. Get going, you guys. This is real. Okay? This is real. This is your future. I think your future is important. Why would it be important to me and not to you? What goes on the income statement? The other 2 types of accounts, what are they? Revenues and expenses. And the difference is net income or net loss, which is not an account, right? It's just the difference between the two. So there's only 5 kinds of accounts: assets, liabilities, equity, revenue, and expense, right? Okay, what do revenues do? They increase your wealth, right? Sell stuff, right? Earn revenue, earn income. Okay, what are expenses? All the costs you incurred to get those revenues. That should just be automatic for you now. And this has to be really, really automatic. You can't be sitting thinking about it. If you give this quiz a shot, imagine having 40 minutes to do it. Right? Can you do this in 40 minutes yet? Maybe. Right? Maybe. If you got this model down, you can. If not, all hell's going to break loose. It's going to be horrible. Okay? You know what? Things I know how to do, I can do really fast. Things I don't know how to do, I can't do. And there's nothing in between. There really is. Because nobody's going to let me do things I only half-assed know. Why would anybody pay me a lot of money to do that? Got it? But I love to do things I don't already know how to do because I have to learn, and here's why I can do it really fast. That's a kick. That's fun. Please give me something I've never done before. I once interviewed for a job with a CPA firm, and they asked me if I'd ever worked on a particular type of client. I says, no, but I don't like to work on clients I've worked on before. I like to work on new stuff all the time. I was in. I could see it in the partner's face. I was in. I like new challenges. I like new stuff. I like new things all the time. I get really bored if I have to do something. True. It is. Nice thing about teaching is at least you people change all the time. You're always people. No, I'll be nice for now. I won't call you dumb shits. Okay? I do that in interview either. You are just people who don't know anything and refuse to learn. Am I right? I describe you. You're just somebody who doesn't know anything because you're anxious to learn. There, I like that. That's good. And pretty soon you'll know a lot. Okay, that's how it'll work. You go to work, keep doing it, keep learning, and you'll be real successful, guys. You'll have a lot of fun. Okay, tell me how the debits and credits work. Assets are on the left, how do you increase them? Therefore, you must reduce them with a liabilities and equity on the right. How do you increase them? That's because right and credit mean the same thing. How do you reduce them? Okay, revenues increase your wealth, right? Revenues and expenses we keep track of for 1 year, and then we start over. Okay? Because it's a year. Start over. Okay, keep track of our income for 1 year. They are temporary equity accounts, huh? So as I increase revenue, I'm increasing equity. Got it? So I increase equity with the credits. So how do you increase revenues? Seeing as it increases equity. With credits. They got to be credits. That's it. It's not because they're on the right. Equity's on the right. Got it? Okay? And you'd reduce them with, and that'd be if you made a mistake, you put too much in there. You did it. Got it? Fix it for the debit. Okay, yes? Not really. Revenue and expense are a subset of equity. So equity's on the right. So with revenues increase equity, because as you sell, you have more equity, right? More wealth. Got it? So the same rules apply. Because equities are increased with a credit, revenues have to be credits. Because they increase equity. Did I do it? Okay, good. By the way, always ask questions. Are there any stupid questions? Yes, the one you didn't ask. If you're working for somebody and you don't know what you're doing and you don't ask, what? And they're paying you to do nothing? Come on. Right? So always ask, always ask, always ask. The first 2 times you ask me the question, first time I'll answer it, the second time I'll make fun of you, the third time I'll probably say you got to knock it off. For crying out loud. Write it down, learn how to do it. My time is valuable, you're wasting it. Don't go to 4. Right? Okay. You guys are going to be high pressure environments, right? Does that mean, are you nervous to ask the question? Never. You ask. When I told the other class, I was working for this land developer in Bellevue, Washington. It's across from Seattle. And I get to see, I was the executive, or not executive, I was the vice president of finance. And so I worked for the president of the company, the owner of the company, too small. Anyway, he'd be gone for days at a time. So I get to see him every day or 2, right? Every other day or 2, or 3, kind of like that. And I usually see him from 7 o'clock at night until 9. And we'd open a few beers. We had a nice refrigerator that he kept stocked with really good beer. So we'd drink good beer, sat out on the deck above this lake where we're a land developer, right? So we had this office, really nice office building. It was gorgeous. It was wonderful. The only bad thing was there was a building we built, this restaurant across the way, restaurant, nightclub type thing. And they're out on their deck, too, in the summer, drinking and eating and partying and dancing and having a great time, and I'm sitting there working. Although they were spending money and I was making a lot of money, so I guess it wasn't all bad. But anyway, what I do is I take those legal pads, yellow legal pads, long pages. I would fill page after page after page with questions for him. Because I'm working on all kinds of different projects. Things were just cooking, all kinds of stuff. And so I'd have page after page after page of things that you get an answer from him on. And during that 2 hours, I'd get all my answers. He knew I was going to do it. He loved it. Because I never called him. Ever. What for? I was going to have my 2 hours. And I had his total attention for those 2 hours. I owned him, right? Although I had to stay to work at 9 o'clock. But every day was 9 o'clock. That was awful. Anyway, I think it was good. Okay, anyway. All right, what do you do with expenses, guys? Always ask questions, anyway, is the point. Only ask them once, though, right? I wrote down all the answers, or, well, those days I had a memory. Okay, you increase with the debit. Why? It's got to be the opposite of revenues, right? Because you're going to take the difference between the revenues and the expenses, and we don't keep track of what that happens. We just take the difference between debits and credits. Okay, but anyway, they got to be debits and reduced with credits. But the real reason is, what do expenses do to your wealth? They reduce your income, which reduces your wealth, right, guys? Your wealth is your equity. So as I am increasing these expenses, I am reducing my equity. See it? It looks backwards. That's what it is. Okay? Good deal. So that's the whole world we live with, right? Okay, I want to add something now. You guys, do you have any wealth? That means, do you have more assets than you do liabilities? Do you have more assets than you do liabilities? All your stuff, all your clothes, all your computer equipment, your phone, your purse collection, whatever. Okay, yeah. It's probably a collection. This one's blue, so is it? Not so much anymore. Now I'm a college kid and nobody loves me anymore, so yeah. Yeah. Anyway, so shoe collection, whatever. Now if you add up everything you've got and then subtract your liabilities. And by the way, if you have school debt, your education is worth more than your school debt. So you have that asset too. You have to include that asset's building. Well, assuming you ever graduate, but Okay, anyway, so do you have equity? Sure, here's one. Where'd it come from? Word, there's one, okay? So there's earnings. What would we call that in a company? That's the net income. Although it could be a net loss too, right guys? By the way, is net income a debit or a credit? Seeing as the revenues exceed the expenses, that's what we mean by net income. What is it? It's a credit. Net loss, what do you think it is, a debit or a credit? Seeing as the expenses exceed the revenues, the debits exceed the credits, it's a debit. This is too easy, isn't it? Do not memorize this. I caught the other class, a whole bunch of people have stuff memorized. I bet before we're done, you guys will prove that you did too. Stop it, stop it, stop it. Why would you memorize anything? I don't need to memorize phone numbers. Do you guys? We used to do that. I used to know my own phone number. What for? Oh. Hi, Tammy, how you doing? My last semester. Oh, my goodness, I can't believe it. Okay. So anyway. Yeah, you know, we got technology, don't we, guys? Okay? So, by the way, does that mean that all information is your fingertips? No. There's a whole bunch of junk at your fingertips, not information, right? Data, not information. Information is something you can use. Okay? So, all right. Anyway, so one of these things that we've got are earnings that we earned, income or loss, right? What do we call that as it accumulates over time? If we, you know, we retain it, would be a really good name to call earnings that we retain. How about retained earnings? No kidding. Cannot call things what they are. Life's complex enough. Might mess around, right? So we use RE for that. Retained earnings, huh? Okay, so that's one, absolutely. So a whole bunch of your wealth came from earnings. Do you have any wealth that didn't come from earnings? You have grandparents who love you? You have parents who love you? Or at least tolerate you, right? Okay, so what's the deal? Grandkids you love, kids you tolerate. What's the deal? Did you get some wealth from them? Did they give you stuff and you don't have to give it back? Well, I don't know. If your parents gave it to you, you have a liability and obligation. If you, right, you have to deliver. If your grandparents gave it to you, no strings, right? Okay, so anything your grandparents gave you, what's the deal? It's contributed capital. You got it. That's absolutely it, you guys. And we already did contributed capital. You read about it? So contributed capital and retained earnings, if you add the two together, that's your wealth. Make sense? All the wealth you have, either somebody gave it to you or earned it and kept it. Okay? All right. So let's say that the owners invest $100,000 in the business. Okay? What $100,000 of cash? What the business get? Don't make it complex. They got cash, right? Cash is a asset. You have more. What do you want to do to it? Well, I'm going to do it. Yeah, that's true, but that's a few steps down. Let's do the accounting first. Okay, I got the cash, and I have more, and I want to reflect it on my balance sheet. So I would debit cash for $100,000, wouldn't I? Would you agree with that? Sure you would. So I have more cash. What would you credit? I heard somebody say equity, and that's the owner's investment. That's their equity. The company now has more equity in it, right? What would we call that? Contributed capital. Later it'll be common stock or preferred stock, but for now contributed capital is fine. So I have $100,000 of equity now. Everybody see it? I got $100,000 of equity now. That's it. How much retained earnings would you have right now? Well, none. You just started your business. Okay? So let's say during the year our revenues less our expenses are $50,000. We did really well. Okay? They invest $100,000 and they make $50,000 the first year. Wow. Okay, but let's say they did. That'd be incredible. Yeah, you made $50,000. Okay? How much has your wealth increased if you earned $50,000? Your revenues less your expenses is $50,000. How much of your wealth increased? Of course, $50,000. So that net income is going to increase retained earnings. You guys agree with that? And in the next chapter, in chapter 4, we'll show how to get it there mechanically with journal entries, right? But that $50,000 will increase your wealth. If you earn $50,000, are you worth $50,000 more? Did you keep it? You retain it? I think so. So how would you increase retained earnings for net income? Debit or credit? What kind of account is retained earnings? Equity. How do you increase equity accounts are on the right? With a credit, because credit means right. Got it, guys? Do I have to remember that, or could I figure it out? Figure it out. Figure everything out. Okay? What do you have to remember? Debit means left, and be sure and put the assets on the left. Everything else is common sense. It just is, isn't it? And a whole bunch of you are going to resist that. And then I'm going to probably see you next semester, or you'll have a D or a C minus. And those of you who don't resist it are going to move yourself right up. Well, depending on how hard you work, you can do a C plus up to an A. Okay? If you don't buy in, it's over. If you don't know the alphabet, you cannot spell. Right, guys? This is the alphabet. Two-thing alphabet. What is it? Debit means left. Assets are the left. Everything else, you can just figure it out. Okay? We can do anything. How many different account assets are there in the world? Billions. If you have more of one, what are you going to do to it? Debit it for that amount. If you have less of one, what are you going to do to it? Credit it for that amount. That's it. All the accounts work that way. You know what? I can exchange assets for assets, assets for liabilities, assets for equity, assets for revenue, assets for expense. Right? Did I say assets for assets? That's true. I can exchange liabilities for themselves or for any of the others. Same with equity, same with revenue, same with expense. You have the idea? So what's the deal here? Figure out what you received, what you gave up, and record it. Big deal. It's easy. What's hard? Understanding the business transaction. Business is hard. Accounting is easy. Accounting is a simple little model. Got it? Why do accountants run so many businesses? Because they know what happened. If you don't know what happened in the business, you can't account for it. So you have to know what's happened. Who do you want to run your business? People who know what's happening or people who don't? Oh, duh. Right? So of course they end up in those positions. Right? Those of you who are going to be finance people, you're also going to be accountants. Or you'll be an unemployed finance person. Well, underemployed finance person. There's still things you can do. You can sell stocks that you don't understand. Wow. It's like being a car salesman who can't drive a car. You know, okay. Never drove the one, you know, you're selling, but no, it's pretty. Buy it, okay? You know, wow. You got to understand this stuff, you guys, no matter what you're going to do. So what would you do to retain earnings if you had $50,000 net income? Credit it for $50,000. What do you think your equity is? There's net income coming in. What do you think your equity is? It's $150 now. Got it? Let's say the next year you have a loss of $10,000. You think that could happen? Sure. One year you make $50,000, the next year you lose 10. Not good, but okay. What would you say? What would you do that year? You debit it for 10. Yeah, the loss is going to be a debit. That's it. Net loss would be a debit. Okay. Now, you know what though? How much retained earnings do I have now? If I earn 50 one year, and then I lost 10 the next year, it's 40. Isn't that cool? It adds it up for you. Okay. What's one other thing you could do though? You might not retain the earnings. What might you do instead? Pay it out. Who would you pay it to? The stockholders. But the stockholders take it out. It's basically what it is. They vote to give themselves a dividend. Oh, I gave it away. Give it to them, and that's called a dividend, right? Is that an expense of doing business, expense of earning your revenues? No. You earned what you earned, and then owners pick some out, right? You're just taking it out. If I put $100 in a cash account, and then I take $10 out, did I lose 10, or did I just take 10 of my own money out of the account? I just took 10 out. Right? So if I've got 40,000 retained earnings here and I pay myself a dividend of 5, what happens? I have 5 less retained earnings because I took 5 out. Tell me what that would do, a dividend would do to retained earnings. Reduce it or increase it? You're taking it out. Reduce it. If it was 5, what would you need to do to retain earnings? Debit it or credit it? Debit. Why? Because retained earnings is an equity account. It is on the right-hand side. So it's increased with a credit, it is reduced with a debit, and dividends reduce retained earnings. That's all. You notice I said over and over and over, huh? What kind of account it is, what you do to it, increase or decrease it, and you're there, right? How much? So what would my retained earnings be? If I had 40 and now I paid out 5 to the owners, what is it? Yeah, and by the way, this is not what cash is, right? This is what retained earnings is. Right? Cash is an asset, retained earnings is equity. Okay, they're different things, and that's hard to get your head around it first. Okay, good deal. What would that journal entry be for that dividend, you suppose? We'll do the journal entry for the net income and net loss a little later. Okay, there's a couple of them actually to get it there. What about the dividend, though? What would you do? could debit an account named dividends, which is a temporary, by the way, retained earnings account. So you could just debit retained earnings if you're going to put it into retained earnings anyway. So it's really debit retained earnings. But you're right. And credit what? If I paid it to them. Would I give them? No, that's if I promise to pay them later. It'd be dividends payable if I promise to pay them later. But if I paid them, it'd be cash. I wouldn't sign a note to the shareholders. They'll trust me. Right? Seeing as I am them, right? Their company. Okay?
So should I call the account dividends or retained earnings?
I don't care.
Okay.
Yeah. Dividends is a temporary retained earnings account. You're going to close it for retained earnings, but we haven't done closing entries yet. So it's really hard to learn this stuff. Hard to teach it then too, because you need to know a certain amount before you can do anything. You know what I mean? We're trying to do it really fast too. So we need. You know what? It'd be really a lot more comfortable if we spent 14 semesters doing this. 15, I guess, 15 semesters. That'd be like grade school. Kind of. But that's a socialization process too, right? You learn a tremendous amount, K through 12. But it's about all kinds of things. Here we're just going to learn that, right? We're really narrow. So we're going to try to learn as much as we can after all, before we're done. What if you're never going to do another accounting, a financial accounting class? You're going to do the managerial. This is your shot. And you know who you're going to have to work with? People like me. And people sitting in this room who are going to become CPAs, right? You're going to hire them, right? But do you need to be able to communicate with them? Only if you want to be a manager, right? Otherwise, not. You can be, you can be a salesperson. You can work at cash register forever, right? Without understanding this stuff. McDonald's, push the buttons. Yeah. I don't think anybody has that career aspiration. Okay, come on. Now it gave me a clean one, but it's not there. Wow. Something's going on with this thing today. Let's say it's really strange. All right. So, what do you think? You want to try? We'll do it that way. That's fine. Let's try doing some of the journal entries from number 9. We could do anything. This is what I did with the other class. We'll do this, and then in the review, we'll do the rest of the quiz. If you're not able to be, how many are going to be here for the review from the 3? Handful. Okay. What's that? If you can't make it, be sure and watch the video if we have one. I'll try to do one. They give us this room, we'll have one. Okay. All right. Let's try number 9. So Laura Company, that's my wife, a flower shop, completed the transactions given below during their first month of operations. Please prepare journal entries for each. The owners borrowed $4,000 cash to start the business. Okay. So, you want to do this one? Sure you do. And oh my gosh, you don't have a quiz, do you? Okay. Listen carefully. I won't do that again, wait. Owners borrowed $4,000 cash to start the business. What did the company get? Cash, which is A. And do they have more or less? They borrowed $4,000 cash. Now they have more. Yeah, they got cash. Okay, anyway. All right, so what would you do to cash? Debit or credit? Seeing as you have more. Cash is an asset, so you different. Okay, so good. This is too easy. You guys can get these right. You don't have any time to think about it, though. You just have to do it. How well do you know it, right? It's like if I ask you your name, could you tell me? It needs to be fast. Okay, move. So would you credit? They borrow cash. They borrow. Credit what? Okay. What account? Notice I put that on the right because it's a credit, and I put the debit on the left. Simple to tell them apart. So what do you want to do? What account? What? You have more retained earnings because you borrowed cash, you're wealthier? I'm going to get really rich. I'm going to go to the bank and borrow $1 million and I'm a millionaire. Really? And you become a millionaire by borrowing $1 million? You might have $1 million in cash, but I don't think you are worth $1 million. I think you're worth nothing. Wouldn't it be like this? This stuff is powerful. You seem real confident, so I can get mean to you. I'll be mean to everybody before we're done, I promise. Okay, so it's the only fun I get. I don't get paid. If you wanted to do this, whoops, way around. You wanted to do this. Really? You think if you borrow money, your equity goes up by $4,000 for 10 years? You don't believe that. What did we do? We borrowed money. What's that? What do you, it's credit for something? Well, it could be accounts payable if we don't sign a note, but they're loaning us $4,000. What do you bet they want interest, and they want to have a due date, and they want to have a piece of paper that proves that they owe it to you, that you owe it to them. You want it to be a what payable? Note payable? Sound good? I want $4,000 here. So you got to figure out what happened. Okay? That's the trick. So what I've got is notes payable. Now what's going to happen? I don't know where you got that one, but anyway, it's fun, right? What's going to happen is you guys are going to do this quiz and you're going to give me answers that are just, what is going on? And you're going to say, well, I couldn't remember. And I say, who could possibly remember? I can write anything I want down here. You could get anything, you could give up anything, right? But everything fits into 5 categories. What are they? Assets, liabilities, equity, revenue, expense, and you know how to increase and decrease all of them. You got it made. Oh, by the way, when you come in to do the quiz, take a blank sheet of paper, don't carry it in with you. That'd be cheating. Anyway, take a blank sheet of paper and write down the accounting equation, debits equal credits, and the accounting equation with the arrows for the debit and credit. Do that for this quiz, do it for the second quiz, maybe do it for the test, and you'll never do it again. You have it ingrained in your brain, right? You'll see that, and you'll know that. It's the way we're going to think, okay? All the way through. If you take 418 from me someday, right? 2 years from now, okay? We'll still be doing it, okay? Doesn't change, right? Same stuff. So for now, you got to have a note card or something with that sitting in front of you. I don't care how you do it. But, okay, all right. So let's do another one. Oh, by the way, what that do to the balance sheet? Have more assets, more liabilities, don't you think? Yeah, I created a balance sheet if it's the first thing the company ever did, which it is. Yeah, I got a balance sheet now. Do I have an income statement yet? No, there's no revenue expense account there. If there's no revenue expense account, there's no income statement. Got it? Couldn't be. Okay, owners invested land worth $10,000 in the business in exchange for stock. You want to do that one?
Well, it would be land, 10,000, debit, then you would credit 10,000 and put it in, it would be like a...
For stock, capital stock of the company, an equity account. Yeah, and what we do is we call it common stock, really, in real life.
So you would label it?
But for now, you can just label it contributed capital.
Oh, okay.
So contributed capital, capital stock would be okay, right?
So would they like invest like any sort of
Common
asset?
Yeah, it doesn't have to be cash. It could be land. Yeah, any asset they give the business.
Okay.
Right? It could be anything they got.
Does it matter
Truck.
if we put contributed capital or common stock?
I'll take common stocks. That's really right, but that's a later chapter. So if you got accounting before, you know common stock, I'm sure you do.
Is what you have written on the board that all you need to write for it to be considered a journal entry?
Yes, you do not have to put plus or minus next to it. That's silly. Nobody does that. And you do not have to put what kind of account it is. If we didn't know what kind of account it is, we couldn't make the entry, could we? So you need the dollar amount and the name of the account, and be sure and put your debits to the left, name and number, right? Account title and number, and put your credits to the right. Account, name, and account and number. And you got it there. Excellent question. Okay, yeah.
For like the first quiz, can we put what account it is just to keep it right in my mind?
If you'd like to do that, you can, but you are going to be under time pressure, probably. Maybe not so much on the first quiz, but on later ones you absolutely will. And maybe even on this one. If you work through this quiz and try to do it in 40 minutes, there's a lot here, right? For where you guys are at, right? There's a lot here. By the end of the course, this will be a joke. By the way, on final, this will be on it. This is a cumulative final. So we're going to start at the beginning here, and you're going to think this is hard. And by the time you take the final, you're going to be like, God, he's asking for this stuff. You got to be kidding. I couldn't possibly miss this. That's good, right? So it's a cumulative learning process. So again, I don't expect very high scores on the quizzes. I never get high scores. And then people will start differentiating themselves on their tests. Some people do real well. Some people will just wipe out if you get ready, right? And everywhere in between. And then on the final, everybody seems to come up, right? Get serious and go after it. So when would you really like to build your skill set, though? Before a quiz or after a quiz? Before a test or after a test? You know, let's use our heads here, huh? You're going to put the hours in anyway, you guys. Putting them in during finals week doesn't make sense. Putting them in now does, right? So, anyway, good. Why did you debit land? Because it is a asset and you have more, and assets are on the left, so you debit and increase. Why did you credit contributed capital? Because it's equity, and you have more, and they're on the right, so you credit. And you know what? Things are going to get complex when you keep going back to that. It seems kind of silly. When you can't figure out what the journal entries are going to say, well, what is that thing? You're going to say, huh? What do you mean? It's goodwill, which is, by the way, an asset. So how do you increase goodwill? You don't even know what it is. I'm not going to tell you yet. It's an asset. How do you increase it? Debit. How do you reduce it? Credit. Leasehold improvements. It's an asset. How do you increase it? Debit. How do you reduce it? Credit. Pension obligations and liability. How do you increase it? Credit. How do you reduce it? Debit. Additional paid-in capital and common stock. It's an equity account. How do you increase it? Credit. How do you reduce it? Debit. That's all there is to it. Rent revenue. Guess what? It's a revenue account. How do you increase it? Revenue? Credit. Why? Because it's increasing equity, and equity's on the right. It's a little tougher to get, isn't it? Salary expense. An expense. Isn't that cool? Revenues, we put the word revenue in the name. Not always. People say sales, not say sales revenue, but we know it's sales revenue. Okay, on expenses, except for cost of goods sold, expenses are always, they got the word expense in it, and they're always debits. And why are they debits? What do? They reduce your equity. Yeah, and debits reduce your equity. That's it. Okay? If you don't know that yet, a lot of you are looking like, what is he talking about? Get on it. Okay, get on it. Friday, to think that's just automatic thought process for you guys. Okay? Will be or won't be. Okay, let's do the next one. You want to do the next one?
Yeah. So purchase equipment for 900, that'd be a debit of 900.
Because it's an asset and you have more.
Yeah.
Okay.
And paying 100 down, that'd be a credit of your assets because you're taking cash out.
Okay, you're giving them cash.
Yeah.
So what we did was we increased cash 4,000 here and we reduced cash 100 here. How much cash do we have now?
300.
Look how nifty this little system is. Start with nothing. You put 4,000 in. You take 100 out. I don't know about you, but I think we have 3,900 left. Just trying to reflect economic reality. That's all we're doing. Okay? Nothing to it. Do we care if there's one or two transactions like that or 100 million? Not in the least. Computer could care less. Debit credit, debit credit, debit credit.
When you're keeping track of all that, like in the T-charts, where do you put the land with $10,000?
It's another asset. Yep. But both of these added together are my total assets.
Okay.
Right?
Okay.
So I have an account for each one.
Mm-hmm.
Keep track of each one. Okay, got it. And then I have another one for equipment. Right? I didn't make the journal entry balance. In the last class, I never did. But somebody pointed it out right away. That's good. By the way, if your boss makes a mistake, what should you do?
Okay.
If you're brand new, say, I might be wrong, but I think that number should be a different number. Or I might be wrong, but shouldn't you make your journal entry balance? You know, that sounds good. If you know them really well, what should you do? Oh, for God's sakes, you know, you got to finish the journal entry. Let's go. Right? After you know them real well and they trust you. Don't do that your first day, okay? Yeah. All right. Some people have these massive egos. It's other things. Okay. Here's next. And the first one? Oh, that's this. This is this. This is called posting. Copying it in there is posting. Isn't that clever? We also talk about posting. Posting is copying. The computer does it. We don't. My hand does. Okay. But this just represents what the computer can do. Good question. That's where this 10,000 came from too, right? That's that one. So we have accounts for all this stuff. Right? Okay, cool. All right. What is the credit of the other 800? What do you want that to be?
It's not payable.
Why do you think it's a note payable?
It's a sign out for the remainder.
I signed a note for the remainder, so it's a note. Why is it a payable?
Because you didn't pay it.
I owe it. I owe it. I'm going to have to pay it in the future. What if somebody owed me money? What would I call it? No receivable. Yeah, absolutely. Which would be a what? Asset, of course. Somebody owed me $100,000. They're going to pay me tomorrow. You think I have an asset? I do. Right? That'd be nice. Okay? Got it? So this is a note payable. We're going to pay it later. Okay, what kind of account is that thing? Payable? Put the word payable on it. What is it? Liability. And why do we credit it? Because it's on the right, and we want to increase it. Right? Credit increases. There. That's how you think every time. I mean, you're swimming, right? If you're taking this quiz and you start swimming, stop it, right? And ask yourself, what'd I get? What'd I give up? Right? One at a time, right? Just do them. Right? By the way, do I care if you do your debit or your credit first? Not in the least, but put the debits first and then put the credits, just like I mentioned, you can do that. So what if you want to do the credit first? Do a little room, write it down, and then do your debit. I don't care. How many? By the way, there's 3 entries here, aren't there? Is that okay? Yes, as long as the debit in total equals the credit in total. Imagine when Exxon buys another oil company. How many lines there are in journal entries? Actually, it's tons of journal entries with thousands of lines, right? For a lot, so right? Okay, good. So that's excellent. Okay, D. Purchase supplies for $300. Do that.
Sure. You debit supplies for $300.
Okay, and I prefer you call it supplies inventory because there's also supplies expense. You can tell them apart. Okay, so for now, supplies inventory. I know the author calls it supplies. We call it supplies inventory, guys. What kind of account is that thing? Why are you debiting? Yeah, more. That's it. Just like when you debited cash, just like when you debited land, just like when you debited equipment. You bought supplies, you debited, huh? Everybody agree with that? It's always happening, okay? And then, what do you want to credit? He wants to go to cash. He buys things on account, and that's cash. Oh, you don't think that. Part of it's just reading careful, right? Carefully paying attention. Right? While you're under pressure trying to do stuff. It's interesting. It's like real work. Right? Lots of pressure. People are, get it done, get it done, get it done, get it done, and you're trying to think 90 miles an hour, get things done. What's the deal? Accounts, what? Payable. Sure. What kind of an account is accounts payable? Liability. Why do we call it account payable? Because it's an open account. They're trusting me to pay later. That's all it is.
What do you label it right there?
Accounts payable.
No, not the debit.
Supplies inventory. Okay. Debit supplies inventory, credit accounts payable. I received an asset and I promised to pay later, so I have an obligation to pay later. That's a liability, right? Named accounts payable. And how do you increase the liabilities? All with a credit. See, when you increase notes payable here, it's a credit. When you increase notes payable here, it's a credit. When you increase accounts payable here, it's a credit. Everybody good? This is easy, isn't it? Okay. All right. Delivered flowers to customers totaling $800. $600 was paid for the flowers when the flowers were delivered, and the remainder will be paid later this month. Who wants to do that one? Can you one back there?
Debit revenue.
Debit revenue. Okay. I want to do something to revenue, but do I have more revenue or less? It's got to be a credit to revenue. It doesn't, because the equities on the right-hand side is increased, the credit revenues are a subset of that, and revenues are increased to credit then, right? Get a 50-50 shot. Never go to a casino. I'm a kid. Okay, right? By the way, if you like to gamble, there's something called commodities market, where you can gamble where there's no house taking the money away, you know, like you go to a casino. You like to gamble? Okay, yeah. Yeah, I do too, in the stock market. Yeah. You could win. I also bet on football games. Not really. I bet with friends, you know. I bet Alan Deck $5 on the TCU. Some of you will have it if you take accounting 212. Keep on, you know, take accounting 212. Alan Deck went to TCU and Alabama. I hate him. I just hate him. I've always hated Alan. No, not really. He's a great guy. But he's a good teacher. But he's insane. Anybody met Alan yet? He's crazy, isn't he? Yeah, pretty much. He's insane. You guys think I'm insane. I'm mild man. Yeah, okay, anyway. So, you think it's going to be credit then, the revenue, huh? What do you want to call the revenue? Credit cash. Debit cash. You got cash. How much cash did you get? Let's do that first. 600. And you have more, so you debited, right? Assets are increased with debits. Okay. But you want to do revenue too. How do you increase revenue? Credit. So some sort of revenue gets credited for how much? What do they sell? Oh, well, no wonder. Okay. Delivered flowers to customers totaling 800, 600 was paid when delivered. The remainder will be paid later this month. You know what's really cool too? Is people who have me for a few classes give so they can listen faster, think faster, and work faster. Isn't that cool? In other words, I make them more valuable. Actually, they make themselves more valuable. Is it stressful to try to keep up with me when I'm talking? Good. So you can. Your boss is not going to move slow. They're not going to do it. They might give you something to read. Go home and read this. You can go slow if you want. When I read it all night, I did it for a few hours. We don't do anything slow, right? The only thing I do slow is doing good burn, right? Yeah.
When I was working this, I debit or I credited inventory $800.
And we didn't give up inventory. We earned revenues, but we'll get there, okay? So let's think about this. That's great. That's a great question. And it's easy to fall into that, isn't it? Okay, so here we go. You know what's really nice? If you work really hard on something and you try to do it like that, when I cover it and I explain it, you really get it. Versus if you're just watching, it goes right by you, doesn't it? When you're working, you try your hardest to do something before you ask questions. And then you ask, right? So you have a framework for asking your questions. Okay, so that's an excellent question. Okay, so what happened is we just increased revenues by 800 because that's what we sold, right? And we just increased our assets, by 600? Nah, how much are we going to increase it by? Let's do that first. 800 total, we got 200 more. What's that going to be, you guys? Accounts receivable. It's on open account, and it's receivable. They're going to pay me later, and accounts receivable is a asset, just like cash, equipment, building, whatever, right? It's an asset. How do you increase all the assets, including this one? Debit. That's why we debited it, right? And do our total debits equal our total credits here? Yes. But I don't want to just call it revenue because there's all kinds of revenues. What is this revenue called? Seeing as they sold something. How about sales revenue? And a lot of companies will just call it sales and not put the word revenue there, but we all know it's a revenue. Okay? Got it? So is there a lot of accounts to memorize here? The answer is no. You're learning about business. Did you guys know people sell things? Did you know people buy things? It's nothing new, right? So relax. We name them what they are. Yes, Becky.
So that remaining $200 for that one, if the customer signed a sheet agreeing
A note?
Yeah.
If they sign a note with interest and a due date and all that, what would it be?
It would be
Note receivable.
Okay.
What if you just trust them on open account?
Okay.
Accounts receivable. Just like an account payable and a note payable, right?
So you just gotta pay attention to see.
Yeah, you got to pay attention to what's going on. Most business-to-business stuff, if you had a business and I had a business, we do business with each other all the time, you're going to sign notes every day.
Oh.
What for? And I'm not going to charge you interest, you're not going to charge me interest, we're going to do business, right?
Okay.
Okay, so, yeah. If you pay me late, I'll charge you interest. Vice versa. You got the idea. Yeah.
Why? Can you explain why you credited the sales revenue instead of debiting? Why did you?
Okay. Here we go. How do you increase assets? Because they're on the left. You don't mind if I make fun of you, do you? How do you reduce assets? How do you increase liability and equity because they're on the right? Reduce with a debit, right? Isn't that what we do? I know you know that. So if you increase equity with a credit and revenues increase equity, what does a revenue have to be? It's got to be a credit. Got it? We there?
Yeah.
Okay, so what do expenses have to be seeing as they reduce equity? Yeah, that's a really good question, isn't it, you guys? Because a whole bunch of you are sitting out there going, what's going on? That's it, isn't it? Revenues is a representation of the increase in your wealth due to selling things. Got it? My wealth went up because I sold. Of course, we're going to have costs associated with that, and that comes back to the question this young lady had back here, right? What about the cost? Let's say I bought this inventory that I sold for $800. I bought it for $500. So this is not part of the problem, right? But let's say we did, okay? If I bought it for $500 cash, what would I have done when I bought it? I'm buying flowers here. What would I have done when I bought it for $500 cash? What happened to cash? Credit cash, good. You know what? I bet all of you guys will do the cash first. I do. Why not? It's easy, right? Okay. Whatever part of the journal entry is easiest, do it first. Why not? What do you want to debit for 500? What did we get? They gave us the flowers. What are the flowers to us? I'm a flower shop. What are the flowers to me? It's an asset, probably named inventory, merchandise inventory or flowers inventory even. They might call it, they call it what they want. But inventory is stuff I bought that I'm going to sell to my customers. It's my asset because I have not sold it yet. As soon as I sell it, it won't be my asset anymore. My customer will have it. You got the idea? So debit merchandise inventory. And that's what you were trying to do, huh? But they weren't buying inventory, they were selling it. Okay? But then if this is what I had done, that would be first. Then we sell it, right? That would be second. I no longer have the inventory. Now what do you want to do? I don't have it anymore. What do you want to do with inventory if you don't have it anymore? Well, yeah. He's a businessman. I like it. Once I sell it, I want more. Yes, I will place an order for more. Okay, you got it. Have you guys ever seen that FedEx advertisement where they show a flower shop and there's nothing in there and it's 10 minutes till the store opens at 15 or something? Ever seen that one? Kind of getting it be an old ad now, but their point is that they'll deliver whatever you need right on time and all that, right? But anyway, the store's completely empty. It's about time to open the store, and all of a sudden a FedEx truck shows up, pulls up, and the store is completely full of flowers, right? Boom, it's full of flowers. How much flowers does a flower shop want to have when they close business at the end of each day? 0, because they deteriorate rapidly. What do they want to have when they open the door? Full shop. Got the idea? So you gauge how much you need. And we're going there, you guys. That's what this is for. When should I reorder? How much should I order? How big a lot? What kind of prices do I get for different quantities? You know, the whole purchasing deal, right? Some of you guys will probably end up being managers in purchasing areas. Great. I'll tell you what, you work for Boeing. Purchasing's a big deal, right? You know, building jet aircraft, purchasing's a really big deal. So anyway, what would we do with this, though? We don't have that inventory anymore because our customer walked away with it. What do you want to do?
You credit inventory.
Yeah, we credit, that goes with this one, right? This would be third thing. So this is first, this is second, right? This is when you bought it, this is when you sold it. This would be the third thing that we do at exactly the same time. Credit the merchandise inventory. For how much? 500? And debit what for 500? It no longer is my inventory, and it becomes a what? It's no longer my inventory. I'm going to reduce the inventory by that $500, right? Oh. So what else must be going down? My equity is, I didn't make 800, I only made, you bought it for 5, you sold it for 8, what'd you make? 3. Expenses are going to have to go up by 500, which will give me 300 net income, which is going to give me more equity by 3. Now I'm really scaring you. That's good. You need to see these relationships. I have 300 more assets and 300 more equity. Okay? All right. So how do I get this expense of 500 in? I debit an expense. What do you want to call the cost of what you sold? The major expense you have. What would be a really neat name for the cost of what you sold? How about cost of goods sold? Not kidding. Cost of goods sold. But what kind of an account is that? It's like sales, we don't put revenue on it. Cost of goods sold, we don't put expense on it. It's a major cost of getting your sale if you're a retailer or a wholesaler, right? Merchandiser, if you're selling merchandise. We'll get into what those are later, okay? Much later. Actually, we'll do it now. Retail is when you go to the store, it's retail sales. A business buys from a business, wholesale sales. That's all. Wholesaler sells to other businesses. Retailer sells to the general public. Now you know that. How many of you did not know that already? Oh, come on. How many did not know what a retailer or a wholesaler is? I bet more than that. Now you do. Isn't that cool? You always will. When you go to work, you'll know. When they start talking about that, oh, cool. I know what I'm doing. Actually, you won't even think about it because you always know. I don't know where I learned what I know, and I don't care.